All right, let's talk Sleep Number. Their Q2 2025 earnings call, man, it was a big one. This wasn't just about the numbers, they unveiled a massive strategic shakeup, a hard reset as they're calling it. And wow, did the market react. Let's get right into it.
And when I say the market reacted, I mean it really reacted. The day after the announcement, July 30th, the stock just cratered. We're talking a drop of more than 14% in one day, on heavy volume too. You just don't see moves like that unless investors were seriously spooked and caught way off guard.
So what exactly caused that freefall? Well, the headline numbers, they were pretty ugly. Let's be blunt. On the earnings side, they posted a GAAP loss of $1.09 per share. Now, the street was expecting a loss, but this missed the consensus by almost a full dollar. Ouch. Then you look at revenue, $328 million. That's a drop of nearly 20% from last year, and it missed what analysts were forecasting by about 8%. So, yeah, a big miss on both the top and bottom lines. No way to sugarcoat it.
Yeah, so these numbers really sent a shockwave through the street. It basically forced everyone to hit pause and completely rethink where this company is headed.
But here's the thing. This isn't a story about a company just drifting without a plan. Far from it. This is about a very deliberate and, yeah, a very painful pivot. And the person leading that charge is the new president and CEO, Linda Findley. She just came on board in April, and she wasted no time at all. She immediately kicked off what she's calling a hard reset, basically telling her team to question everything.
So let's dig into this hard reset, because really, it's the absolute core of the story right now. It's this super aggressive plan to fix the business from the ground up. And understanding it is key to understanding both why Q2 looks so bad and what they hope the future looks like.
Okay, so the whole strategy really boils down to three main things. First, they're getting super aggressive on cutting costs, like way more than before. Second, they're completely blowing up and redoing their entire marketing strategy. And third, they're taking a hard look at their products and where they sell them.
And just to give you some perspective on those cost cuts, heading into the year, the plan was to trim about $80 to $100 million from operating expenses. A pretty solid number.
But with this new reset, they've basically thrown that old target out the window. Now they're aiming for over $130 million in savings. That huge jump tells you just how serious they are about this. It's not just trimming the fat anymore, this is a deep, urgent overhaul. Now that marketing piece, this is where things get really interesting, and it's also the main reason for that crazy revenue drop we saw. They basically took an axe to their Q2 marketing budget, cutting it by 30%. Why? Because they said they were purging these huge, inefficient programs. And yeah, it hurt sales, no doubt. But, and this is a big but, they're saying it's already working. They're seeing a 24% jump in conversion rates, and their cost per acquisition, what it costs to land a new customer, is getting a lot better. So the whole idea here is short-term pain for long-term gain. They're giving up sales today to build a much more efficient marketing engine for tomorrow.
Okay, so with all that action happening, let's talk about what they're telling investors to expect for the rest of the year. Let's look at the guidance.
So for the full year, they're pointing to net sales of about $1.45 billion. Now that's still down 14% from last year, so we're not out of the woods, but here's the good news they're pointing to. They see gross margins getting a lot better in the second half, up around 61%. And, this is a big one, they're aiming to get to break even on free cash flow. So the message isn't, hey, we're going to have a huge V-shaped recovery. It's more like, we're going to stop the bleeding, stabilize the business, and get our margins back under control.
All right, whenever you see numbers like this, the next big question is always about debt. Are they going to get in trouble with their lenders? And that brings us to something called a leverage covenant. It's basically a rule from the bank that says your debt can't be more than X times your earnings. For Sleep Number, their ratio is 4.56x. Their limit is 4.75x. So they are really close to that line, which is not great. But the key thing is, they're still on the right side of it. They're compliant. And they said they're already talking to their lenders to try and get a little more breathing room.
So you might be thinking, okay, they have a plan, they're cutting costs, they're handling their debt, so why did this stock get absolutely hammered? Well, that gets us to how the market is looking at all this. And let's just say the verdict is pretty cautious, maybe even skeptical.
It's like management and the market were watching two different movies. On the earnings call, management was all about, look at our marketing efficiency. Look at how great our margins are going to be in the second half. But what did the market hear? All they saw was that massive drop in sales, that huge earnings miss, and oh yeah, the fact that a new interim CFO just showed up right before the call. That kind of churn always makes investors nervous. So you've got this huge disconnect. The market is basically saying, That's a nice story, but we need to see the results. Show us, not just tell us.
Okay, so with all that as the backdrop, let's do what we do here. This is our take on what you should be watching for in the next earnings call and what it all means.
It all really comes down to this one simple question for anyone looking at the stock right now. With this whole reset, with all the risks and the potential upside, what's the actual plausible trade here? All right, here's our prediction for the next call. We think you're going to see the first signs of revenue starting to stabilize. The bleeding will slow, and we'll see if those margins are really improving like they said. As for the stock price, we think it's going to be stuck in a range for a while. It's not going anywhere until the company actually proves this whole reset can deliver real growth, not just cost cuts. Because of that, we're putting a market perform rating on it. Now, for more experienced traders, what's a plausible idea? Maybe you look at a long-dated option strategy, something like a straddle or strangle. Basically, it's a bet that the stock is going to make a big move, either up or down, sometime in the future. You'd be positioning for volatility probably around late 2025, when we start to hear more about their big 2026 product refresh.
So there you have it. That's our breakdown of Sleep Number's wild quarter and their path forward. And of course, a reminder, this is not financial advice.